If you have ever fallen out of an airplane, or jumped rather, as people don't tend to fall out of airplanes by accident, you will know that the parachute is the strategy. And at the moment, it seems like the markets are in free fall. We've already reached correction territory. The S&P 500 is down more than 10%. The Nasdaq is down even further, with Tesla down over 50% at this point. So what should you do? Because when you look online at the moment, what you will often see is sell, sell, sell. But that doesn't seem to make sense. Let me pose you a question. If you were going to buy something like a new jacket, do you buy it when it's at the peak of its price, or do you buy it when it's on sale? Now, the backdrop to all of this is the threat of a looming trade war. Trade wars are like Russian roulette for countries, except there's 6 bullets in the chamber. And there is a historical example of this both literally and figuratively. In the late 1800s, the Republicans tried to do exactly the same thing. They would try to raise tariffs on foreign goods in order to make them more expensive so that Americans would buy domestically and strengthen the American economy and also bring industry back home. The plan was also to put pressure on the Canadians in order to potentially annex Canada until Britain, a powerful country at the time, stepped in. Now, unfortunately for the Republicans, it didn't work. What actually happened is domestic goods rapidly rose in price, and although there was more domestic production, they became very unpopular and were kicked out of office. In his second term, McKinley, President William McKinley, the 25th President of the United States, often coined as the Tariff King, changed his mind about tariffs until his untimely death in 1901 when he was assassinated. Now, I want to address something here. One of the other things we often see in times like this are references to Black Monday, the 1929 Wall Street crash. Couple of things to note. First of all, this actually came about in part because of tariffs. In the 1920s, Herbert Hoover, not to be confused with J. Edgar Hoover, the FBI director, they increased tariffs, the Republicans, and that led to isolationism and higher prices, which was a contributor to the 1929 Wall Street crash. But it wasn't the main one. The main contributor was excessive speculation in the Roaring Twenties. Ultimately, the Dow Jones fell by about 90%, and it led to the Great Depression, where a third of workers lost their jobs and there was widespread homelessness. Even people who kept their money in cash often lost it because the banks failed. And the Great Depression didn't end until the Second World War. When Japan attacked Pearl Harbor, people were forced into the military for jobs, and that built the economy again, the military-industrial complex. Now, 1929 is unlikely to happen again. First of all, because investors don't invest in the same way now. Before modern portfolio theory, investors often had short-term trading, whereas nowadays it's more about long-term diversification. The other thing is that the Federal Reserve didn't have the same levers as they do today. After 1929, they first of all tightened monetary policy, which is the opposite of what they do nowadays to mitigate against further disaster. The other point to say is that back then they had the gold standard. They could only print money out in accordance with the amount of gold that they actually had in the country, whereas now they can print more quantitative easing to pump into the market in times of distress. So it's very unlikely we'll see another 1929. And the other thing is that tariffs were not the key contributor. They were a contributor. The key contributor was excessive speculation. Now here is the key point. We didn't know, at least until recently, what the endgame was here. It was either that Trump's tariffs were effectively a negotiating strategy in order to offset the trade imbalance America feels it currently has before bringing them back down and opening up the world to free trade again. Because when we don't have free trade, there's higher prices. Or if it was a long-term strategy to block off the rest of the world, like they did in the 1800s, and bring production back domestically to the United States. Now, what Trump has said recently sent alarm bells through the markets because he said he was prepared to have a market downturn, in other words, to have a recession in order to implement his plan, which would suggest that this is not simply a short-term strategy. It's a long-term strategy to bring domestic industry back to America. And yet, Trump's playbook would suggest otherwise. In his first term, he used the threat of tariffs to renegotiate with NATO and Mexico. And bearing in mind, Trump always leverages his position to try to get what he wants. Trump is, after all, as he says, a deal maker. And the stock market has always been a barometer for Trump. He is not going to want the stock market to fall under his administration. Now, if Trump manages to renegotiate, but plans to have still a free market, but one which favours more so America, that will benefit American companies and ultimately American stocks. So that seems like it could be the end goal. But what do investors do in a situation like this? Because people get anxious, they make emotional decisions and pull out of the market. But the problem is that 80% of the best stock market days are actually in a downturn. It's the rebounds that give those huge returns. The second thing to note is that the stock market is currently on sale. Now, we don't know where the market will be in 2 weeks. It might be back to normal, there might be an even greater sale, but all we know is the stock market is on sale at the moment because we've had devaluation of stocks. Ultimately, that creates a buying opportunity. So long as you have sufficient cash to cover your short-term needs and your emergency funds and can afford to lock money away for the longer term, when the market is down is actually a good time to buy, not to sell.